He's Rob McEwen. He's Executive Chairman and Senior Leader at McEwen Mining. Rob, welcome to Kitco.
Thank you, Michael. Happy to be on.
Can you take us through the latest results at McEwen Mining?
We put out our quarterly results earlier this week. They weren't what I'd say were stellar. They were far from it. We had to take a write-down on our gold bar asset in Nevada, quite a substantial one. And so that was the bad news. The good news was the exploration that we're having, the success we're having in Timmins at our Grey Fox property, which is part of the Black Fox mine complex. Last year, I have to go back into last year. Last year was a disaster. It seemed we'd gone through every quarter we gave guidance and every quarter we missed. The author of that guidance is no longer with us, so that's good. We've made some changes, trying to get our people focused on cost per ounce rather than cost per ton, which they like to do, move material rather than focus on the, let's say, getting the value out of the ore we mine. We hired a new chief operating officer. He started on the 2nd of April, Peter Ma. And I'd worked with him at Goldcorp in my Red Lake days. He's a very skilled engineer, lots of experience, both underground and open pit, and quite innovative. So we're looking forward to starting to deliver on our guidance now that we have a new team in place.
Just can you thumbnail what were the issues at Gold Bar?
We employed a firm, SRK Consulting, to do a resource estimate of our gold bar property. That estimate of the resource formed the foundation for our feasibility study and mine plans. And it depicted the ore body as being laterally distributed, stratigraphically controlled. We started mining it, and we were getting in, there's 3 deposits, and we started, the first one, we were getting better grades and tonnage than that had been forecast by the model. And then late last year, we started mining at a second deposit, and we weren't seeing a positive reconciliation or grades and tonnage better than forecast. It was going the other way. We brought this group back in and said, take a look at it, what's wrong with the model? And they came back and said, well, rather than laterally or stratigraphically controlled, it's vertically controlled. And that means you don't have as many tons and you don't have as many ounces of gold. And we said, but now wait a minute. We based our feasibility in building it on this model you had. Well, I guess it's not the way. And so on that basis, we had to take the write-down. As we're mining, there's more stripping involved, and you're mining a narrower ore body. The good news is we won't have to move as much material, but there's still some uncertainty as to the life of the mine and what we're going to be producing this year.
Let's talk about some of the positives. It looks like we're getting some good results out of Grey Fox.
Yes, we are. Getting some great results. We just have under 900,000 ounces measured and indicated at 7 grams. It would be, we're looking at it at partial open pit, partial underground. It's 2.5 miles from our Black Fox mine on the same property package. So, and it grew by 43%, 42, 43% on the measured and indicated, which I think there's still a good room to expand that. We started advancing on our Froome deposit, and we'll see production coming out of that. We're expecting in the 4th quarter of next year. And there's been some good results coming out of Black Fox. Although Black Fox has a short life as we currently know it, we think Froome will pick up where Black Fox cuts out. And then when we finish Froome, Grey Fox will be permitted. And then we go over to stock. And we're looking at a situation where you could have 100 or 150,000 ounces of gold a year. We're still in the early stages. I guess if I were to compare to last year, where we just seemed to have a lot of issues, many of them were non-recurring. At the Black Fox mine, there was a crusher fire. We had employed a contractor to crush the ore, and his crusher caught fire in the middle of the winter, and we didn't have revenue for 7 months or 7 weeks. And then a few months later, there was a flood on the west side of the mine, and there were certain areas we were mining from that we couldn't access for several months. Both of those will not occur again. So I'm looking for a better year this year out of Black Fox. And at Gold Bar, there was this desire, again, cost per ton. They pushed the operation to a point beyond its capacity. It required lots of maintenance, lots of downtime, and we're not playing that game this year. As I said, we're going for margins, not for moving our cost per ton down. So quite excited about that. And we'll have to do 2-3 quarters of delivering on time, on budget, before I think the market starts taking us seriously again.
What is the impact of COVID-19 on operations? Are we going to see more of that coming through Q2? Because I believe there was some disruptions to operations at McEwen.
Absolutely. In both Mexico and Argentina, the government shut down mining. There's only residual leaching in Mexico right now, and in Argentina, they've allowed, it's operating at 50% capacity. There are travel restrictions between the provinces down there, and a lot of the workforce comes from outside the province. Yes, Q2 will definitely have an impact, or Q2 will be impacted by COVID, as I suspect Q3. Black Fox is up running, but it was closed for a number of weeks. Just out of caution, we didn't want to permit the spread of any or of the infection or amongst our employees. And Gold Bar right now, there's basically a shutdown there at the moment.
What's it like for operations for a miner where we stand right now? Everything looked quite dire in mid-March where everything started coming down, but what is it like getting fuel, logistics, people at the various sites?
It hasn't been a problem so far. Some was a little slower, and there's a few more steps you have to go through in terms of safety and precautions to prevent any possible infection. But no, it's coming back to operation. Some of the consumables and that there were short supplies because there was an interruption in the supply chain.
I think that maybe that's hopeful, but I wanted to turn the conversation to the general economy as well as the markets, and I know viewers want to hear about your opinions on it. And it was like, what do you think the impact of this COVID-19 has been in terms of the setback to businesses?
Depending on certain businesses, the type of business you're in, some has been disastrous, like retailers and malls can't open their doors. Bars, restaurants, they're closed still. Lots of layoffs. More people who've had to work at home are getting used to the technology. It might have an impact on office space rentals going forward. Maybe you don't need as large an office. Maybe you're not in the office as frequently. Maybe you use technology. I look at this COVID shutdown, it reminds me a lot of, in ways, of the postal strikes we used to have. And the post office would shut down, and then there were private couriers that started taking some of that business away, and now they're a very big part, and the post office is suffering as a consequence of that. Will office space be a consequence of COVID? In other words, will people not want as much office space, or maybe there's more shared space like we work? Definitely more remote, and I think you'll see more automation. The mining industry, at least in Canada, is facing a very steep decline in the workforce, projected workforce over the next 10 years, largely due to demographics, just the retirement. It's an industry with a lot of older employees that are entering their retirement stage. I saw one number from the Canadian Institute of Mining that they expected 91,000 people to retire over the next 10 years, and 50,000 of those are engineers and geologists. So we're going to have to move faster to automation.
Let's talk about the markets. For March, we had that steep drop off, and everybody seems to be choosing their favorite letter. So it's a V, or it's a W, or it's an L. Do you have a particular? Do you have a particular letter that you're fond of, Rob?
S for steroids. The amount of money being issued by governments around the world to deal with COVID and its consequences is just beyond imagination. It's like quantitative easing on steroids. History would tell you that such a large increase in the money supply, without regard for how you're going to pay for it, is going to lead to a debasement of currencies globally, which I think has a very positive ramifications for gold and silver, and anything would be considered a hard asset. So I think the mining industry, those in the precious metal space, are in for a good run going forward.
This run depends upon general interest or general investors coming into the gold market. Has there been any milestone that you've seen that you can point to, or any particular, uptake in terms of the interest in gold? I remember when we talked back in September, you were telling Kitco that it was remarkable, for instance, the bullish call that Citibank had on gold.
Well, now it's Bank of America with a $3,000 price tag on gold 18 months out. What you're seeing in the last 6 months, I found it quite interesting. The senior golds have outperformed the mid-tier and juniors by a big margin, almost double. So there is money moving into the seniors right now. We've watched the seniors buying juniors, not really venturing into the intermediate space. The market's starting to take note of discoveries. You've seen some good runs. Free West Ventures, Great Bear's been running for quite a while. Amex. People are starting to take note of these discoveries. And I think you'll see the seniors venturing into that space. I look at Red Lake and Newmont Goldcorp selling the Red Lake mine. I would think anybody who's in Red Lake, there's this huge milling capacity that's just been acquired by a new investor. They'll probably want to lock up some of these discoveries that are appearing in the neighborhood, and they have the processing. Why build a new mine when you could? These plants were running at below capacity.
Why are the seniors skipping to the juniors right now? Why are they skipping the intermediates?
Price would be one point, and discovery the other. The intermediates were doing better, say a year ago, than the seniors. The seniors were bogged down with a lot of debt. They were selling off their higher cost operations and were out of favor. They're now, with the higher prices, their cash flow has increased substantially, and so dividends have been increased, say in Newmont, Barrick. So they're more attractive as an investment vehicle, and they're also part of all the indices in a big way. I'd say Newmont benefits immensely from being the only gold stock in the S&P 500.
Have you seen also any benefits that would be around costs? So we've just had these tremendously low oil prices. Do you think that will be in addition to profitability?
It should be if someone locked up at the low prices. Mm-hmm. If you could have bought your oil at negative $4 a barrel or something. I don't know if the industry was that nimble, but certainly if you're operating an open pit, fuel costs are huge. I mean, even in an underground, if you're remote and that's a benefit.
Rob McEwen, thank you very much for your time with Kitco.
Michael, thank you for your interest.